If someone's going to pull together a business plan, what do you think's the key things that they should think about when writing it?
For me, a business plan is basically a one-page strategy document, right? It should be empowering the senior management team to come in and provide some of that. We would start off with looking at, what is the purpose and what is the vision of the company.
Oh, everyone, we got our TikTok star back again. We for those of you that just listen to our audio version, you might not realize that I'm pumping out 3 videos a day on TikTok. And one of the ones that took off like a flyer was from Phillips. And you guys probably know him from way back, good few months now. What's happened since the last time we saw you, Murray?
Well, we go in and out of covert crisis mode. You get a number of clients that wonder whether they're going to survive. So it's all about keeping them pacified, looking at their systems, and if necessary, pivoting them, but always being with them on the journey.
For sure. Yeah, did you have certain moments where you found it quite hard to stay motivated and to stay involved and to keep consistent? What was your secret sauce to stay on target?
I think it was offering new challenges all the time, and there's no consistency to them. So every employer had a different issue. 1 or 2 of mine were closed down, and were reopened as essential service, and they're booming.
Oh, right.
Others in hospitality are stagnant, and they're struggling to know whether they're going to survive or not. So very much paying a close attention to them and giving them extra leadership.
Yeah, no, fair. I mean, my version wasn't quite... Our clients, we only had, 3 or 4 calls over the lockdown, so it was quite nice. Yeah. But
they'll be welcoming the conversation.
Yeah, well...
giving them encouragement.
For sure. That's the hardest thing, is when times get tough, it's hard to see beyond in front of your face. So you need sort of someone thinking on the outside and the strategic side of things. And one of the core aspects I hear from nearly every accountant I come across is writing a business plan, and there seems to be a consistent trend where businesses that don't do quite well are the ones that didn't think ahead and didn't have that strategic side of things. So what do you reckon, if someone's going to pull together a business plan, what do you think's the key things that they should think about when writing it? Okay,
so for me, a business plan is basically a one-page strategy document, right? It should be empowering the senior management team to come in and provide some of that. So we would start off with looking at, what is the purpose and what is the vision of the company? Getting consensus there, right? Once we get that and we map out what our core objectives are, we then will start to look at from a financial point of view. I tend to go for a scenario where I do what I call a bottom-up budget. In other words, what is the return that the shareholder wants, right? Mm-hmm. Your semi-fixed and fixed overheads, so you add those to it, and that becomes your gross profit. Mm-hmm. Then you say, well, what's the gross profit I achieved and I want to achieve? Because you might have an improvement factor there. You factor that in, and then that becomes your turnover. Traditionally, people say, what's the turnover I need? What's the GP? What are my overheads? And oh, hell, the boss is going to get this or not receive a return. So I turn it the other way. What does the boss want as his reward for his service and his investment and his risk? What are the overheads? Give me a gross profit. That becomes turnover. Mm-hmm. And then we sectionalize that out onto, let's now split that quarterly. Mm-hmm. Right. Now, some businesses will actually have a seasonal trend, so it's not take the total turnover and divide it by 4. That's not what I call a budget, okay. Right? Overheads occur at different rates, and so it's all about designing the overhead structure and progressively mapping it out on a month-by-month or a quarterly basis, depending on how you want to go.
Okay.
Right, you consolidate all of those, you put in your objectives, what you want to achieve in the next 90 days, what you want to achieve in the next 180 days, and you build it out. Okay, we submit it as an advisor, we submit it back to the company, get their buy-in, not only from the owners and shareholders, but then from senior management, and then we'll implement it. We'll strategize it, and we'll create a detailed cash flow plan. Mm-hmm. with profitability measures, and then we'll push that into their accounting system and then measure them. Okay, so it's all about accountability. But they've all got to buy into it on the way through.
Yeah, you got to get collective buy-in.
And if you have a business plan that's 5 or 6 pages, people get stuck going beyond page 1. So keep it short, succinct, and as to say, it might be 1.5 pages, but we like to say it's a 1-page business plan.
Okay, fair. I mean, there's going to be challenges, so we've got a diverse range of audience on our podcast.
So part of that is we use a principle in business advisory called ORBED, right? So it's all about what is above the line and what is below the line. So as directors, you are above the line and you assign the below the line to your management team. So in other words, you don't step down and do what should be done at a managerial level, right? You stay there looking at your strategy and your investment decisions and guide the general manager to perform with his staff.
Yeah, I think I kicked you into business coaching mode, so we've got to reel you back in a little bit, because there's a lot of people out there that will be like, gross profit, overheads, what's happening? What's some anecdotal sort of stories that you can talk about that maybe a business strategy helped people think of what was around the corner, or maybe people that didn't have the business strategy and it led to their downfall? Do you have any sort of stories or anecdotal sort of things?
I mean, there's many stories, but primarily it comes back to who in business has got a business plan, right?
Yeah.
If you're a structured and professional type of organisation, you'll have it. If you tend to be a 1-man or 2 or 3-man business, you're on the tools and you don't necessarily think about all those planning documents. But those plans actually help cement your business direction.
For sure.
So, yes, I would encourage you to have a business plan. Now, business plan, get an advisor in to challenge you and question you and lead you into that strategy.
So what are your thoughts on, so most people, the DIY side of New Zealand is be trying to do this business plan themselves. What are the challenges they face with that, do you think?
They only know what they know. And if you have external advisors, they will challenge you outside of your assumptions to say, are those achievable? What about this? Could the implementation of this sort of system improve your reporting structures or your processes to get maximum returns? Okay.
So can you think of sort of points where you've challenged in instances where, like Greg always calls it, making the invisible visible?
Yeah. So this last year, I've got a client I've had for 5 years, and it's traditionally been just the owner and myself doing the business plan. But this year we decided to become a little more professional with it, and we actually invited the management staff into it.
Oh.
So that was quite a challenge for them.
Yeah.
And something that I talked to the business owner about is he starts work at about 7 in the morning, and he actually finishes about 6 or 7. And he works on Saturday. I've had the occasion where I've actually walked into his office and he's been asleep.
Yeah.
Right? So this is about, is there a work-life balance? And in that organisation, historically there wasn't. So I said to the guys there, right, if we improve turnover by this and profitability by this, I want this year to introduce another person into the team, and he's going to do all the quoting that the owner is doing. So the owner is actually doing all the grafting, the selling by the quoting process, and not actually getting out and meeting his customers.
Yeah, it's crazy.
They thought, that's a bit of a left ball. But we're driving through with it. We've determined that there is profitability in the business. There will be a slight fall off in the first 6 months as we adjust to the additional overhead of another salary, but it does free up the owner, 1, to get a work-life balance, but 2, to actually go and meet his customers, and more so importantly now with COVID.
Oh, massively.
He's got to know his customers.
Yeah, I mean, why are you in business? Like, what you just want to work so hard, fall asleep, and then you're not going to be able to enjoy the things you want to enjoy. But I was just curious. So on the COVID, there's been a few challenges for business, and one of them is obviously cash flow, because suddenly they're out of business, they're closed.
Yeah.
Is there some things they could think ahead of time, or what they can do now? Like, tell us about the cash flow.
So, what I've recommended to my clients is we get down, instead of doing a monthly cash flow or even an annual cash flow, we actually get down to doing a 13-week cash flow, and it's by the day. So we're planning 13 weeks in advance on a daily basis, and we measure it. And part of those cash flow principles can be looking at your sales in terms of, have you got an increase in sales or have you got a decrease in sales? Can you look at the timing of your can you look at your terms of trade? Can they be changed? You know, gone are the traditional days of the 20th of the month, which actually becomes a 50-day cycle, right? Yes, in traditional business, that is the way. But if you're like a tradie, why not set your systems up so you have an FPOS machine and collect payment as you leave the premises, but pre-warn the customer that's what you're going to be doing. You know, we're going to offer you a service, but hey, we expect payment on the spot.
Yeah.
Right? That will certainly increase cash flow. Another part of that principle is, you know, you might have a lady in the office who has traditionally done the debt collection process. So they ring up the client once a week saying, hey, you're overdue with your debt. Let's arrange a payment. Now, if you actually thought about it and outsourced that process, because having done it myself, who likes ringing up debtors saying, hey, you owe us? If you actually outsource that function to a credit agency who does nothing else but ring on your behalf consistently every week and follow up where the payment has been promised and not delivered, the cost of that is far outweighed by the introduction of more cash into your business. So, you know, if you've been trading 50, 60 days and you introduce that debt collection process, you'll find that your cash flow comes down by 30 days now, or up to 30 days, or even better, right? Now, what's 30 days? Well, 30 days is 1 month's turnover. So just think about that. What is your average monthly turnover? And if I speed up the process by outsourcing it, how much cash have I got in the business? That way, you are paying your suppliers on time, and especially in these COVID times, it's all about the circular flow of cash, keeping cash flow moving.
For sure. Have you heard of any creative ways over COVID that people sort of had a workaround? Not necessarily clients, but just someone that sort of thought outside the box and tried a few things, or...
Yeah, well, this was the time that people started to look at their terms of trade, as I've mentioned, tighten those up. But also, if you've got new customers coming to you, why are they coming to you? Hey, we welcome them with open arms, but be cautious, right? They might have had their credit supply turned off with another supplier, and they're coming to you. So be cautious. Do things like credit bureau checking. Don't offer them a credit application form and accept it. And typically, what happens on a credit application form is you think, who do I pay on a regular basis? Let's give them as a reference. Well, that's not a reference, right? Spend the money, go to a credit bureau, and they will actually check the industry and check the client. Yes, there's a cost, but it certainly saves a risk.
For sure. What Jeffrey Hughes' favourite line is, it's better to build a fence on the top of the hill than clean the mess up at the bottom.
Totally.
Yeah.
And it's all about being smart with process.
For sure. And so the smart, because part of what you do is the financial awareness coach, which is quite a nice ring to it. Well, like with that, so you've got these sort of different pieces at play, and you need to go in depth and sort of break it down, because it's better to teach a man to fish than to tell him how to fish. I remixed it, but I like it better that way. It's faster. What do you actually do for someone that so
in a financial awareness coaching program, what we look at is we actually want to understand each business owner's knowledge of the terms that accountants will use.
Okay.
So, you know, and it's not only accountants, it's banks, anyone that's lending money. So we start, you know, what is aged receivables. How can that be impacted? That aged receivables is when you sell on credit, right? And then you've got to go through this debt collection process.
Okay.
Right? Aged payables is you've incurred supply and you're going to pay them per the terms of trade, whether it's cash 7 days or the 20th, right?
Okay.
Then you look at your inventory and you look at any short-term liquidity issues. So what we're trying to get to there is what we call working capital. Is it positive or is it negative? So working capital is you take your current assets, which is typically your bank balance, your debtors, and your inventory.
Okay.
Less what is payable within 12 months. So it's your creditors and any short-term maturing or portions of loans that you've got owing, right? If that's positive, then you've got a positive working capital.
All right.
If it's negative, in other words, what you owe is greater than the anticipated income coming into you, then it's negative working capital, and that's when you call it insolvency.
Yeah.
Right? So you're always looking for those terms to understand that the client actually knows what they are and how to drive them and how to measure them.
Okay.
Right? Beyond that, you then start to look at each of the principles of what sits in a balance sheet. Mm-hmm. And it's all about, do they understand why we split loans up in terms of long-term loans? Mm-hmm. We say, hey, a portion of it's going to be repaid in 30 days, so we'll push that up to a current liability situation, and the balance will leave long-term. Okay, so we go through every line of the balance sheet and get them to understand it. But not only do we work on the balance sheet, we actually work in the profit and loss account. So we want them to understand what is gross profit, right? So gross profit is the difference between the cost of making that sale taken away from the actual sales value, and that becomes gross profit.
Okay.
And the idea is we actually turn that into a percentage. So what is your gross profit percentage? Mm-hmm. Okay, it's not necessarily markup, but that's what we're trying to measure. And we want to understand that as what we call a KPI and check where you are in the industry. Are you within range of what everybody else is charging and making the same sort of margins? Right. We then look at your overheads. We'll say what portion of these are fixed and what are variable. Your fixed overheads are your things like your salaries, your rent, your lease commitments. Mm-hmm. Your variables can be things like advertising. Okay, so there are any number of those that we look at and get you to understand where they sit in your profit scenario. Okay, so it's not a 1 or a 2 day workshop because that's information overload. Yeah, but we will come in and we'll educate you as a business owner so that you can make financial decisions with certainty. You understand what impacts the profit. You understand what impacts liquidity. And we take you through that process. We then look at your financial accounts and we'll sit with you on a monthly basis and implement the strategies we've talked about and work at how we can improve them. Okay,
fair. It sounds like, so there's borderline information overload, but you explained it well. I'm just thinking as well to be mindful of, so there's, I sort of see in business there's people that will appreciate the value that you share and the knowledge that you're imparting, but might not necessarily want to go like through the process with me. So is there ways where business owners can upskill themselves, take on their own initiative, and like how do you keep on the ball? What's your
well, as a chartered accountant, we have a minimum of 20 hours of compulsory education that we must do. So that's any profession has compulsory continuing education, right?
Yeah.
So we do that because there's new legislation coming forward, there's new tax requirements coming forward, and it's what is front of mind at the moment. Is it technology? We've got to keep up with what's going on with technology. Accountants have to be very tech-minded at the moment in terms of gaining efficiencies, both for themselves and for their clients.
Do they teach you how to coach, or do they just teach you numbers and tax? And are they onto that yet? Are they realizing that the profession is slowly dying if they don't turn into business coaches?
Yes, so people are aware because, the likes of Xero, as an example, they've made it streamlined and easy to learn. So a business owner can go onto Xero Education or Xero University and actually learn the processes. Oh, right. But that's how to process a set of accounts, right? Yeah. But do they actually understand what they mean? Yeah. Are they just doing it so that they can reconcile a bank account? Are they doing it so they can reconcile and file their GST returns? But, a business owner can do so much, and then it has to go typically to a chartered accountant to finish.
Yeah, well, and it's about why do you want to do it? You're in business, you're not an accountant. You're obviously interested in the field that you're working in, engineering, construction. Yeah. You're a lawyer. Why do you want to be sitting there processing GST and thinking? Yeah. But the biggest thing I've learned, nearly anything I've achieved in life has been from the inside of an outside perspective, because as you say, you don't know what you don't know. Yep. This whole podcast started because of Jordan Greville, so I wouldn't have thought of it. I didn't even listen to the podcast. Yeah. So here we are. So all right, they're upskilling. They're going to this Xero University, and then obviously they need a coach on the outside. But I've heard this term thrown around a lot, and I'm wondering if you could help with it. It's called CFO. Yeah. I haven't worked for a corporate or anyone that has a CFO, so what do they do?
So CFO is an abbreviation for Chief Financial Officer. Uh-huh. And that can be deemed to be a corporate position. Mm-hmm. In other words, it's the finance manager, finance director, right? However, from the outside as a consultant, we tend to offer what we call a virtual CFO. In other words, we will remotely work or consult to you on a part-time basis. Okay. So it might be 1 day a week, 1 day a month. And what we're doing there is we're actually looking at your finances, and typically with a member of your staff. Yeah. Okay. And we will look at the results, check everything is in balance. Mm-hmm. We will produce an annual business plan, annual cash flow plan. We'll then check the accuracy of the financial information that has been processed. We'll introduce KPIs, mm-hmm. and we'll actually measure the business and have a regular meeting with the business owner and take them through the results. So it's not to say, hey, you made X, Y, or Z. It's, hey, you made X, Y, or Z, but our budget said that this is what you were going to do. Mm. So what are the variances, and why did those variances occur? Right? You typically don't want to look at anything that's less than a 5% variance. You want to look at anything over that. Okay. And get an understanding. Is it a trend that's developing, or was it a one-off occurrence that we had an expected higher cost? An expected higher cost than we anticipated in our budgets. So as I say, it's all about KPI measurement. We're doing it remotely. We might do most of it remotely, but we'll come in and have a one-on-one, or with COVID, we might do that meeting by Zoom. Okay. So we are a part-time professional in your business where you can't necessarily afford a full-time person in that position.
All right. Well, I think we've got to retract a little bit, because you're very knowledgeable, and I feel like the audience is missing out on the opportunity to hear this knowledge. It does sound a little bit like, oh, come see me, Murray, which is all right. It's justified, because I think you do have some valuable insights. But I really want to just start, I guess, for lack of a better word, milk as much as we can out of what you know. Mm-hmm. So how do you recognize a good CFO from a bad CFO? Like, what are some good ways to look at them in terms of, like, how are they just focused on the numbers? Are they meeting with you frequently? Like, where do you see the mistakes that CFOs make, and where do you see the good things that they do?
Well, I find that if you come from a commercial background, uh-huh. You have knowledge across a number of different industries, mm-hmm. And it's using that knowledge from a diverse range of industries, mm-hmm. to apply to a particular set of circumstances. Okay. So no two businesses act the same way and perform the same way. It's, as I would like to say, I come in and I look at the numbers and I say, oh, there's a bit of a trend there, or that's a bit sharp in terms of the numbers, mm-hmm. and I'll start to explore them. Okay. right? So it's all about not necessarily accepting the numbers, but forensically analysing them.
Okay.
Okay, you don't have to go in detail for every line item. You just do it for those that demonstrate an exception. Right? It's offering that advice to clients from a wide range of industry knowledge you've gained over time.
It makes sense. I mean, like psychologists, what they do is they have a deep understanding of the principles of their prior clients and patterns.
Yeah.
But what they have to do is, sure, you get the red flags and recognize, hey, this is an issue, but you got to treat the person as an individual, because it's very easy to create biases and to have stacked data. I do that quite often. You know, there's certain points where you just use intuition and instinct based on the pattern recognition you've learnt prior.
That's right.
Do you have a process for catching yourself? Like, obviously numbers are easy because the numbers are the numbers, but do you have a way to make sure you're not judging this client on your prior clients' experiences and treating them?
Typically, in a virtual CFO type role, you're across a number of different industries, right? So the patterns aren't necessarily the same, and the timelines or lags aren't necessarily the same.
Okay.
Right? So you go into a client set of data, and you focus solely on that for the time being, right? And then you extract from your knowledge bank ways to improve that business. Okay, so it's not one set of rules fits all. It's what would help in this instance.
Okay, it makes that almost is an indicator of someone that would be a good CFO, someone that has a diverse range of experiences. Because the system itself is actually making you treat everyone as an individual, because you've got such a different. You're going here and it's completely different to over here, and
yeah, well, it's not what I call top-down management, right?
Yeah,
I see a set of numbers. I want to understand why those numbers occurred.
Yeah,
and that can only come from interaction with the business owner and his sales or management team.
True.
Right? You've got to have that picture as well.
Okay.
Before you can be really judgmental, or offer the advice.
Okay.
It's quite easy to go down a path, but unless you've checked in to the reality curve of what is happening inside that business, you don't know. So you've got to have an open mind all the way.
Yeah. Oh, it's an art, and it's very easy to get closed in and think in that small aspect. There's another thing.
See, the time that you would actually be quite clinical about it is when you're actually making applications for finance. What better time than now with COVID? Banks aren't accepting typically applications direct from clients without them going through a chartered accountant who's going to challenge you on every one of your decisions, right? What happens if sales is only 80% of what you project? Where do you pull the business back on those?
For sure.
So you have the risk and recovery type scenario analysis that you've got to submit. And you don't necessarily, as the business owner, think about them. You've got a vision, and your vision is this is what we're going to achieve. As the chartered accountant or CFO, but what happens if this doesn't occur?
Yeah.
What happens if you win a major sale, but there's huge risk with it, right? So we challenge you all the way.
For sure. So there was one final thing that you wanted to get on, because we've got 5 minutes now. So it's a board of advice. There was something you mentioned that would be quite useful.
So one of the services that we offer is that while we don't want to be a director on your board, we will sit on the outside as though we were a board of directors, and we will actually sit there and mentor you. And the suggestion typically is that if you're a reasonable size organisation, you would have your management team has their management meeting, but you'd introduce, say, a chartered accountant, maybe a lawyer, maybe a sales director from external sources. And so we'll bring the economic circumstance to reality inside those discussions. That's what a board of advice is. We're there to guide the board without the responsibility of being a board member.
Yeah, I think you need that. Sometimes boards get a bit too caught up in the bottom line instead of what needs to be long term. But
also, we sit outside of your business, so we're not there 9 to 5, 5 days a week, right? So we're not bogged down, shall we say, in the business's clutter.
Yeah.
Right? We're using, so we're using whatever the financial reports are. Yeah. We're using whatever sales management reports have come through to us. We're using economic reality of what is in the market today, and we use our own experiences to empower the business.
Good call. And for those of you that want the secret sauce and how to empower yourself, there's a book. I'll put a link in the podcast description, and they can just reach out to you, and you can. You did a personalized note on my book, so
that's right.
I actually read it, even though it was about a topic I did not want to learn, but I needed to, and I actually got through it, and I actually learned. So
great.
That's the best thing I could say about accounting book.
Yep.
And yeah, check it out.
It's not an accounting book. Yes, it's been written by an accountant, but it's actually called Starting a Business, Growing a Business.
Yeah.
Right? So it's my knowledge of 30 years in a commercial environment, giving back to prospective business owners or business owners in there now about how to help grow their business and manage their business so that they come out the other end with an investment, which is when they sell their business.
Fair.
Right.
Fair. And it is valuable, especially, I mean, I class as an accountant book just to show that I was actually able to read it with that perspective, but obviously it's more of a business holistic viewpoint. Yep. And so check out Murray, hit him up. You've also got a report that I read through. It was SME report.
Yeah. So that was a research for 2021. Yeah. And it's all about what is happening in industry and what are the pain points and where are industry sitting with things like succession planning. Where are they with cash flow and that? And it's all about using those as norms to drive business improvement for yourself.
For sure. So, yeah, it's always good to give an insight of what's around you. And on that note, thank you for your time. And I hear you may or may not be doing a podcast, so I look forward to hearing how that comes together.
Great.
And, yeah, thanks for coming.
Okay, thanks very much. Thanks,
Cheers.
Ryan.